Hi, you're watching ET Markets Live. I'm Neha Vashisht. Welcome to a brand new episode of IPO Talk, where we talk about the latest IPOs in town and more. Today, we are here with the management of Glen Industries to talk about the company's ongoing IPO. Joining us today is Mr. Lalit Agarwal. He is the chairman of the Glen Industries. Thank you so much, Mr. Lalit, for joining us today on ET Markets Live.
Thank you, Neha, for calling us.
But the pleasure is all mine. So let's quickly start with our session for today and let's start with the IPO first. So, Mr. Lalit, what is the core objective of the IPO and how do you plan to allocate the proceeds across key areas such as capacity expansion, R&D, or even debt reduction?
Okay. The IPO's main objective is to fund our expansion project, which is going to cost about 100 crore. About
Hmm.
48 crore will be funding through the IPO. Balance will be funding from the internal accrual and from term loans. The, rem- the total IPO size is about 63 crore. Out of that, it will be meeting the expenses for the IPO itself and some general corporate purposes.
Okay, so Mr. Lalit, let's also talk about the company a little bit. You currently export to 19 countries. What is your strategic roadmap for entering new international markets, global markets, and which regions are you prioritizing right now?
We already present in the major developed countries like USA, entire Europe, Australia,
Okay.
and some Middle East countries. Our next target is we already started supplying to Korea and enter the Far East market and expand more customer base into US market.
All right. So, Mr. Lalit, would you like to add something about the company first? Do you want to give a little bit of history about the company?
Yes, first I will give the background about myself, then come to the company. I did
Sure.
my engineering from BITS Pilani in 1980 and did my MTech from IIT Kharagpur in 1984. I worked for almost 15 years since then. Last assignment was in Israel. Came back in 1998 and started manufacturing ballpoint pen in my old company called Austin Private Limited. In that company, we started manufacturing also thin wall food container in 2010. In 2017, we were three partners decided to part ways, and I decided to take the thin wall food container business of that company. Eventually, that business was transferred in 2021. But with the objective of manufacturing thin wall food container, I started the plant in Glen Industries itself in 2019, along with manufacturing compostable straws also. So as the market requirements kept high,
Hmm.
I kept on expanding the thin wall food container manufacturing until 2021 in Glen Industries. Then came the law to ban the straw of polypropylene. So we started expanding also the compostable straw line and also started manufacturing U-shaped straws gradually. So today we are the biggest manufacturer in the U-shaped straw as well as in the thin wall food container in India.
All right. Thank you so much, Mr. Lalit, for giving this information about the company because it will definitely help the retail investors understand the company more. Now, let's come back to the details of the company. Could you also share your current order book position, both domestic and global? And how do you expect it to evolve over the next 2 to 3 years?
See, like in any FMCG company, we don't maintain any order book positions. When you talk about export, we always have in hand about 2 months of exports because
Okay.
in exports, we manufacture only after getting the order. But for the
Hmm.
domestic market, we are supplying to across all India's length and breadth. So we have a distribution network and orders keep coming every day and we keep shipping to them every day. So there's nothing like order book position because that happens only in the project and long delivery terms items. Ours are short delivery, so we book the order and next day we ship it out. So we maintain the inventory at our hand for shipping it out right across.
All right. Let's also talk about the manufacturing facility you have in Havra. It is an advanced facility, and what is your current capacity utilization there, and how much incremental capacity will the IPO funding enable when it comes to the Havra facility?
Yes. First of all, the new facility will be at a new location. It will not be at the same location. So there are two separate factories will be there after the IPO proceeds come in. Now let's talk about the existing factory. We are having the capacity of manufacturing 665 metric ton of thin wall food containers, and then we can make about 120 ton of paper straw and 125 ton of PLA straw every month. When we talk
Hmm.
about the capacity utilization, we are already running 24 by 7 for almost 350 days of the year for the thin wall food container, and we have already achieved the max optimum capacity utilization. We are not able to produce anything extra, and but the demand is extremely high for us,
Yeah.
both domestic as well as international market. So there comes the necessity of setting up a new factory for thin wall food container. Now, when we talk about the new factory will be having three type of products to be manufactured. One is the thin wall food container by injection, which we are doing right now. Then we make
Okay.
also thin wall food container by thermoforming, which is a complementing process, production process. And there again, like if we consider these two and the existing, then we will have about 2,000 metric ton of thin wall food container manufacturing capacity against the present 665. So you can see that it is almost tripling.
Hmm.
Then we will also make paper products, food container products like paper cups, single, double layer, three layer, as well as paper food containers and paper boxes. So there we will have about 750 metric ton per month capacity.
All right. So, Mr. Lalit, let's also talk about the demand. You mentioned that there's a lot of rising demand right now, and of course, taking in account the companies like Zomato and Swiggy, people are ordering out a lot. Packaging is required more and more every single day. How do you plan to maintain operational excellence and process efficiency as you scale up the production volume to meet these demands?
First of all, you are very correct. The demand is rising because the changing habits. Delivery apps have
Hmm.
accentuated the demand pattern not only in India, across the world. That is
Yeah.
one big factor. Now coming to the meeting the international standard, our factory, existing factory is already of the international standard, and we are meeting as far as the quality and pricing at par with the other leading manufacturers like Chinese manufacturers or Malaysian manufacturers. So we are
Hmm.
not really afraid of this from this aspect. When it comes to the new factory also, we will be having almost at par manufacturing facility, which is all the developed countries are having in their hand. It is fully automated production. Products are not touched in by hand
Hmm.
during the manufacturing process, because we are manufacturing food contact products. So we have to take care of the food safety aspect of the product.
Absolutely. Let's also talk about some numbers, some financials. So, talking about Glen's PAT margin improved sharply from 5.9% in FY24 to 10.7% in FY25. I want to understand what were the key contributors to this margin expansion, and do you believe this performance is sustainable going forward?
The reason for increase in the margin from 24 to 25 was mainly bigger contribution coming from straws, which has a higher contribution in the terms of PAT or in the terms of EBITDA.
Right.
If you look at the figures of 24, then you will see that the contribution of straws was much lower compared to 25. So the biggest contributor was the straw manufacturing capacities increase. Now, when you talk about the sustainability, I will say that when we set up the new factory, the straw contribution will be only 10% compared to what it is 25% now, because we are more going to focus on the food container business. So
Hmm.
10%, then we expect that our EBITDA margin should be only in the range of 18 to 19%.
Okay. Uh, Glenn has a presence in over 25 states in India and 80 cities. What are your next steps to strengthen and deepen your domestic distribution network?
We already covered most of the A and B cities in India. My next
Hmm.
target will be to go to C cities or strengthen the network, existing distributors network itself, because we already have widespread availability across India. So we only look for the pockets where we are not present and
Hmm.
appoint a distributor. So that will be only the focus area, because otherwise, broadly, we are available in major cities in India. So we don't want to create competition by appointing more than one or two distributors in each city. So we
Okay.
will strengthen our existing network and they can consume our products They can
Okay.
distribute our products. There is no problem about the distribution network itself.
All right. So, Mr. Lalit, just an additional follow-up question. Is the focus of the company more on domestic side or international, or are you guys planning to have a balance between the both international and domestic networks?
It is a very nice question. Our focus is always on domestic and exports. In fact, when you talk about 3 years back, we had
Mm.
about 60% export when straw business was very minuscule.
Yeah.
But after COVID and then the problem of inflation and energy prices in Europe and USA, the demand of exports came down. At that
Mm.
time, we expanded our domestic network and domestic selling. Then a lot of export orders started coming, but we were not able to fulfill those export orders because we don't have the capacity to meet the demand. They then started the necessity of setting up a new factory. So our focus will be both in exports as well as domestic, and my target will be that export should be somewhere around 45% of our total turnover. And when we design a product, we always try to see that it has a demand both in domestic market and international market.
Hmm. Okay, so talking about demand a little bit more, how do you see the demand for eco-friendly alternatives such as PLA and paper straws evolving in India and globally right now? And how is Glen positioned to lead this shift from traditional plastic products to eco-friendly alternatives? Because in the last few years, a lot of people have become very, concerned about their health, and they don't want to use plastic that much. They want healthier alternatives, and they are very well aware of the negative effects of traditional plastic products. So, what's your take on this entire situation?
Neha, actually, more than the consumer's behavior, it is the government compulsion and government regulations which is pushing from non-recyclable product to compostable and biodegradable products. But in spite of all said and done,
Hmm.
the regular banned single-use plastic items are still available. Therefore, finding costlier products demand is little slow. So unless the banned items are not pushed out of the market by regulations already there by the governments, by implementing the law, the costlier replaceable items demand will be low in India. Like we are not able to sell too much PLA
Hmm.
and paper straws in the domestic distribution network, but we are able to sell in corporate because they are conscious about their brand. Similar thing is happening also in the world. Many countries they allow PP straw, like USA allow PP straw. Europe doesn't allow PLA straw. They allow paper straw. Middle East they
Hmm.
allow everything. So it depends on country to country how the demand and supply demand will be playing between the three products: PP straw, PLA straw, and paper straw.
Hmm.
And we are competent to supply any kind of product as per the demand of the customer. So that is the
Oh,
most beautiful part of us, that we can supply each and every product as per the demand.
all right, great. So before we close, let's briefly talk about the IPO and what is the company planning when it comes to the IPO, and how will the proceeds be used?
The proceeds of 48 crore will go towards the new project, as I told earlier. And
Hmm.
we already in the implementation stage of the project, likely to be completed by next January 26. Another 5 to 6 crore will go towards meeting the expenses of the IPO. Balance will be for general corporate purpose, which is allowed as per the norms of the SEBI and stock exchanges. So this is in general the process will be used. We are not going to reduce any debt because that will be reduction will be through our internal accruals. We'll be
Okay.
meeting the debt repayment obligations. We are not going for any other kind of tangible or intangible investment from the IPO proceeds.
Okay. All right. Any closing remarks for the retail investors out there?
I will only suggest to retail investors that our company is on a growth path. The SMEs IPO don't take into account the discounted cash flow of the future. It only takes into account the past performance.
Hmm.
Since we are going for a new project, our capacity, our turnover, our profitability will multiply in the coming few years. So therefore, you should invest keeping a 3 years horizon in mind and have a long-term approach to the company. And I can assure you, you will get a very good return on your investments in coming years.
Superb. Well, this marks the end of our segment for today. Thank you so much, Mr. Lalit, for joining us today on ET Markets Live. It was a pleasure talking to you today.
Thank you, Neha.
Thank you so much. Thank you, everyone, for joining us today.